All right, what is up, traders? What's up, tycoons? Super excited for today's video. Another installment in the market breadth series. Today, we're going to take a look at the McClellan Summation Index. So that's going to be our indicator here on the bottom. We're going to go over how to read this indicator and the ways that I really like to use this indicator to spot potential movements in future price action for the S&P 500. When used correctly, this can be a leading indicator versus something known as a lagging indicator. And we'll break down all of that in today's video. We'll also give you guys a nice little technical definition of the McClellan Summation Index, so that way you guys can truly learn about it. And then we'll dive deeper into, again, how I like to use it to spot divergences. If you're not familiar with that simple term divergence, it's actually not that complicated, and we'll break it down very simply in today's video. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. All right. If you're new to the channel, I actually started a completely free newsletter for you guys called Investment Intelligence, giving out free valuable finance content as well as free trade ideas. Okay. I try to sprinkle in 1 to 2 free trade ideas a week. And this is what they'll look like, right? Highlighting the chart conditions, showing you guys the chart itself, what it is that we're looking at. Right. And many of these trade ideas have worked out very, very well. The reason being is because I'm choosing quality over quantity, right? I'm not coming here and spamming you guys in your inbox every single day with 5 to 10 different stocks, penny stocks, pump and dumps or whatever. And then, responding saying, hey, look, one of those stocks went up 20% today. No, rather, these are high quality setups, okay, that I look for, and I try to sprinkle in 1 to 2 of those every single week for you guys through the newsletter. So if you're fans of free trade ideas and free valuable content, you'll really enjoy that newsletter. Sign up using the link in the description. You can also just join the Investment Intelligence Discord. This is where you get access to all of the different trade ideas, okay, such as these over here. These are a lot of the plays that we've been in here recently over the past month or two. You also get access to all of the custom scripts and indicators and the day trading strategy I use to get these really nice returns on options trading the S&P 500. And you also get access to all of my chart layouts and flexible grids, such as the one we're going to be going over in today's video. All right, so let's go ahead and get into it now. And we'll talk about that. That's going to be the McClellan Summation Index. Okay, so this chart layout right here, this flexible grid is available to all of the members in the Discord. And, we have about 35 of these. And this is just one of them. And so what that means is that, you'll be able to load this screen on your Thinkorswim, and these divergences and the way the chart looks and everything will already be done for you. So a lot of the hard work is already done for me. From me. And so for you guys, all you simply have to do is load these things up, learn how to use them, and then you can use these as potential leading indicators. Now, when I speak about a leading indicator, what does that really mean, right? There's 2 types of indicators in the market. There's a lagging indicator. A good example of that is going to be a MACD. Okay, you may have heard of that indicator before. And that's something that is a lagging indicator, meaning, people often look for bullish or bearish crossovers in a MACD. And this is going to tell you what's happened after it's already happened, right? So oftentimes you see, the price moving down a lot after or like during a MACD crossover, right? And the reason that that crossover is happening is because of that sharp move to the downside, right? Versus a leading indicator is going to tell you something that could potentially happen in the future before it's happened. And so we'll go over how to use the McClellan Summation Index as a leading indicator. One of the reasons that I really like to look at it. Okay, it also spotted the bottom here in October of 2022. It gave a very good buy signal and a really good leading indicator that things could potentially start going bullish. And we'll break that down, but let's give you guys a quick definition, right? So by adding up all of the daily values of the McClellan oscillator, one can produce an indicator known as the McClellan Summation Index. It is the basis for intermediate and long-term interpretation of the stock market's direction and power. When properly calculated and calibrated, it is neutral at the plus 1,000 level. Now, the plus 1,000 neutral level was instituted back in the days of manual calculations because some users had trouble with keeping track of the minus signs when subtracting a negative number from another negative number. Now, because the McClellan Summation Index in the 1960s generally moved from 0 and positive 2,000, Sherman and Marion shifted the neutral level to 1,000 to make a negative reading a rare and thus important indication. The expansion in the number of issues traded on the New York Stock Exchange has caused these overbought and oversold thresholds to also expand. Now, when divergences occur between the S&P 500 and the McClellan Summation Index, they can signal potential shifts in market momentum. For instance, if the S&P 500 is trending upward, but the Summation Index is trending downward, this could suggest underlying weakness in the market's advance and possibly forecast a downturn. Conversely, if the S&P 500 is trending downward while the Summation Index is rising, this might indicate underlying strength that could lead to a future rally. So that is my favorite way to use it, okay? Not so much as overbought or oversold. So we just gave a definition basically of those divergences, but just to make things a little bit clearer for you, a divergence is going to be when the S&P 500 is doing one thing and the McClellan Summation Index is doing another thing. So let's take a look at the most recent example over here, okay, where we have a divergence. So take a look how the S&P 500 is making a low, and then we're coming here and we're making a lower low. So we're making lower lows here on the S&P 500, but on the McClellan summation, we're making a low and then a higher low right here. So now we have a positive divergence, a bullish divergence, you could say, on the McClellan summation index, okay, being that we made a low and then a higher low, and the S&P made a low and then a lower low. Okay. And so that bullish divergence happened here back in October of 2022, and that signaled the potential bottom there. And you can see we started a very strong rally afterwards. Now, just before that, okay, we had a signal indicating that we could be, due for a downturn, due for bearishness that signaled the very beginning of the bear market in 2022. Take a look how we're making a high and then we're making a higher high right here. So we have a high and higher highs, and then we have a high and lower highs. So, in this case, we have a negative divergence or a bearish divergence on the McClellan Summation Index, indicating that there's underlying weakness in the market. And you can see that that started a very sharp downtrend. Now, this has occurred and happened many times in the past. Okay, you can see over here, lower lows, and then we have higher lows on the McClellan Summation Index, and the market starts to rally. Okay, this is, during the great financial crisis bear market. And then in this period here, we're making higher highs while the McClellan Summation Index is making lower highs. This is a bearish divergence, and you can see the market gets a significant pullback. All right, over here as well, we have this area where we continue to make higher highs and we're continuing to make lower highs here. And then the market sees a significant pullback. All right. And, many times these divergences have been very, very good signals. So, not only can you use this just for market breadth to tell when, hey, maybe things are a little bit too overbought. You can see here when we get up to these conditions here, the market generally will pull back a little bit and experience a little bit of pullback, but you can also use it as a leading indicator to spot potential divergences, that could signal, when things could potentially go bearish, when things could potentially go bullish. Okay, so it's a very good indicator. There's many different ways to use it, and we just covered those in today's video. Now, remember, this is a McClellan Summation Index. There's also, the McClellan oscillator. So what I recommend to you guys is to look up my last video on the McClellan oscillator. Okay, so that way you can use both of these and add these to your measurements of market breadth to really get a better understanding of, where the market is, what the current structure is, and if the rally is justified, if the pullback is justified, and if there's any divergences that you could potentially use as a leading indicator to spot a potential buy or sell signal. Now, if you enjoyed today's video, okay, you can go over to my Ko-Fi page. There's a link in the description there as well. And you can click on this commissions tab, and that's where you can actually book the 30-minute and the 1-hour sessions. Okay, I do these personal sessions all the time. And you can book those directly through the Ko-Fi page. You can also come to the Ko-Fi page and, request a YouTube video on a specific topic of your choice, or you can click on this buy a coffee button. That's basically a way to leave a tip or donation for the free valuable content I do put out there for you. Don't forget, you can also sign up for the Investment Intelligence Discord. It's only $10 a month, and that's where you get all of my different analysis. That's where you get access to all of these different chart layouts, such as the one that we went over today. There's over 35 of those. There's actually custom scripts and indicators there as well as scans. Okay. And, if you don't want to pay for anything, you can always join the Investment Intelligence newsletter using the link in the description. And that's where you'll get 1 to 2 free trade ideas a week, as well as free valuable finance content and free trading content. Thank you all for watching the video, and I'll see you in the next one.